Good morning and happy Friday to each and every one of you out there. Hope everyone is doing well. Of course, my name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And of course, the game plan's goal is to go over things from a technical chart perspective, avoiding hype and narratives. It is what it is. The charts are the truth, right? Everyone else can spin their narratives and pump and dump and do all that nonsense. For me, I've found success in trading by focusing on charts which don't BS you, right? And that's really the key. So let's talk a little bit about today. Number one, markets are dropping sharply. All right, now it's just before a 3-day weekend, and we have headlines out today with Trump threatening 50% tariffs on the EU starting on June 1st. He's basically saying there's been no progress in negotiations, so therefore June 1st, 50% on the entire EU. That's pretty shocking, folks, and that's put the markets into an initial sell-off. Then, as if that's not all, folks, then we had him threatening Apple with 25% individual tariffs on any phone that is not made in the US. So again, now we're seeing Trump going after individual companies, and that again caused Apple to dump out sharply this morning and really sending technology stocks and a lot of stocks down because of the precedent that it sets, right? If you can target individual companies and say, hey, you make those over there. Well, if you don't bring them back here, 25% on that good coming in from wherever it comes in. So it's an escalation. And we know the markets had rallied significantly up into the last week or so. And in the last week, we've been kind of hammering on levels in an overbought state, looking for pullbacks, and it looks like we're getting it. So let's jump into the charts. This is the S&P futures, and you can very clearly see the drop that when those two headlines on tariffs were made, we saw occur in the S&P futures. So we are looking right now at the S&P basically trading down 1.5%. The NASDAQ, the QQQ down basically 2% to start the day. And usually what's so interesting about this is usually pre-3-day weekends, there tends to be more of a calm. People take a little bit early off. They go away on vacation. And so there tends to be more of a neutral to upside bias, usually before 3-day weekends. But not today, folks. We are seeing selling going in to the open. And the one thing I would just say, if I'm an investor who's holding longs or buying throughout the day, let's say buy the dippers, do you really want to hold into a 3-day weekend when headlines on trade and tariffs could be coming up? And that could keep the markets into a mode where we don't see a buy into the end of the day, into the holiday weekend, but in fact, a sell-off into the end of the day as people don't want to hold over the weekend. All right, so if we look at the S&P futures, we are trading just off of the lows. You can see the big dump here. This is the 10-minute chart, by the way, so each of these candles is 10 minutes. So that headline came out basically at 7:40 in the morning, a.m. Eastern time. It then continued to sell off. We had a small technical bounce. Now we're starting to come down, and today could be one of those days where we are down over 2%, maybe even 3% on the indexes based on how overbought we were going into this, right? So here you can very clearly see from the lows down here on the S&P, look at this. So number one, we knew we hit major support, and this is why charts are just the best, right? Every retail, not everyone, I shouldn't say, but most retail investors were panicking down here. Major pivot top from 2021. Upsloping trend line from the COVID low through these lows, and look at where the market stopped on a dime and reversed. So while everyone, or a majority of people, were extremely bearish here, the charts actually said to buy. Then you saw this big rally to the upside here, a total of almost 24% from the S&P futures low to the recent highs. And lo and behold, what are we seeing? We're now seeing, as people were getting so bullish here, right? I mean, look at this. 1, 2, 3, 4, 5, 6, seventh candle, which is a time count. If you know your time counts, which I teach in the Winning Trader series, that put in a top and then look at the market slowly going down. Now, remember, just the other day, we were watching a couple sideways candles here and trying to say, okay, well, are we putting in a bull flag, right? So what type of pattern are we putting in? Is this a vertical move with sideways to slightly down consolidation, which could lead to another move up? Or were we going to see a more sharp move to the downside, which would not be bullish, but in fact could actually be something like this, which then puts in a bear flag and another drop eventually, right? And so listen, the day is not done yet, so we have to watch and see where things close. But ultimately, it's making it a hard sell to be a bull flag with this type of movement unless we start rallying up by day's end. All right. So again, very interesting to take note of that. The other thing I just would like to point out, folks, is that I did point out we were into key resistance. Remember this zone of resistance on the markets right here. So we talked about how you have this area here down to these lows. The markets were into resistance and we came in. And of course, I told you guys that up in this basically over the last 2 weeks, I was starting to accumulate shorts in this zone here as again, I, for one, thought the markets were overdone to the upside. I was taking note of all the bullish sentiment that was resuming, right? I mean, if you look at stocks like Robinhood, you look at stocks like QBTS, a lot of the supercomputer stocks, they were all going nuts. It was like the happy days were back again. And for me, it's not to say the happy days can't continue, but as a psychologist on the markets, I start very acutely looking at how people are acting. And when people act basically like hot potato, meaning, hey, this stock or this crypto has very little long-term value, but if I buy it here, I think I can dump it to someone at a higher price. That's a mentality of greed that is usually the end of a move, not the beginning or the middle. And those are things that, again, as a longer-term 26-year investor and trader, that I watch very closely for as an indicator. Just like when we were at the lows in April, people were saying, oh, this market is horrible. This is the worst. This market's going to keep collapsing. And in my head, I said, wait a minute. Interesting that everyone's starting to freak out about the markets, including analysts, right? And analysts, once they start to freak out, you really know it's the bottom, right? Because they're that much of a contrarian indicator. But once you look at that psychology side and flip it into the charts and look and say, wow, the S&P futures were trading right into this key technical level, now you have the makings of a good long opportunity. So just continue to watch that. On a pullback, I'm going to be looking for this area right here, this little pivot high, this little gap fill. At right around 56.75, that's going to be my first area that I'm going to be watching for support on. All right, here's your chart on the QQQ. The Q's pre-market, you can see big drop here to the downside. We basically, and just keep an eye on this, right? So we were just at 523 on the QQQ Wednesday, right? So on Wednesday, we were at 523. We're now at 504, $19 drop. Now, again, you know, it's not the biggest of moves, but it's still for a 2-day move or 2 to 3 day move. That is a significant drop in the markets. Now, again, same thing, markets extended move. If we look at how far of a move the NASDAQ made, would you say this market was due for a pullback, 30% rally in 6 weeks? Maybe a check back. And again, what we'll watch is to see if we come down. This is where I think we'll start to meet support right in this area. This is going to be your first big test level here, right? You can see this little zone, gap fill, little pivot high, and it even almost goes over to right over to this area as well. Now, on the way back down, that will be support. And for me as a technical trader, I will be watching to see how price reacts at that level. The 10-year yield. So you can see how the 10-year yield today is coming in. Now, normally, if the 10-year yield's coming in, markets would be rallying up. But the trade news is actually causing an issue there because the trade news, the tariff news, the threats on Apple and the EU are actually putting essentially they're preeminent. They're number one. Those negatives are outpacing any sort of downside in yields. In addition, the way the market normally works, folks, the way the market normally works is that when yields fall, what does it mean? It means that there's a rush to the safe haven of treasuries. Okay, so right now, the bond market is working the way it should work. Now, remember, in early April, it didn't. Even when there was a rush of fear and panic, which usually means buyers of treasuries, US treasuries, we actually saw yields going up, which means people were dumping treasuries. And I think it was China, it was these other countries, right? They were like, oh, you're going to tariff this much on us? Fine, we'll just not buy your debt, which really put us in a bind. It actually made Trump backpedal on a lot of the tariffs on everyone except China, and then a China reduction of tariffs were reached. But the point being is right now, the yields are coming in because if you have tariffs on these countries like 50% on the EU, it's going to slow the economy, which then raises the odds of lowering interest rates. That's how it's supposed to work for now. So let's keep an eye on that. If we start to see tariffs being imposed and yields going up, that would be very disconcerting to the whole entire market. All right, the dollar today is also inching lower, so no safe haven demand here on the US dollar, at least for now. But again, just something we want to monitor very closely. Apple is getting hammered pre-market. Here's your pre-market intraday data. You can see that threat came out early in the day here, early this morning, a big drop, and now we're consolidating down almost 4% on Apple. Now, if we look at Apple, where is my day tradable level today? First level is going to be here at around 189.70. Now, this is just for day trading, not for swing trading. I will not touch Apple for a while as a swing trade because, again, it's really in no man's land. You've had a big fall, big bounce. If we start to break lower, this would be first major support at around 170. But my guess is it would go as low as 164 down here. And then I would consider a long opportunity on Apple. I know that sounds like a long way down, but remember, Apple in a week fell from 225 to 170 or 169. So, I mean, it's not unprecedented to see a big move down. In fact, let's do a measured move here. This is another thing from the toolbox. So you had this drop down here. That was a $55 drop on Apple, or 24% drop. If we take that here, this would be your measurement, right? From your high, and we've started to fall. If this were to be a measurement, this would give us a downside target. It's a little bit below that first level I gave, which was right here. But look, where does that coincide? Right in this zone here. Look at that, guys. So basically, see this pivot over here and right there. That would be basically in there. So essentially, the way I would work is I would take into account the measured move, and I'd say, okay, as a swing trade on Apple, and obviously we're jumping 10 steps ahead. I have no idea if Apple's going to slide down all the way like this. But if it does, the goal is to be ready, right? If you're not ready, you're going to miss out on the trades. It's just that simple. You're going to be caught kind of with the pants down and be like, oh my God, what do I do? I'm fearful because the markets are dropping. And versus if you game plan it, then you'll be ready and say, oh yeah, I kind of knew this could happen, so let me be a buyer. So the idea here for me at least, and I'm just gaming out my potential setup for a trade, would be to start buying a position here at around 164 and then adding here at around 155, 156, and then even leaving a little room just in case it overshoots, maybe at 144 down here would be another pivot. But then essentially your dollar cost averaging for a bounce, you make 10, 15%, maybe 20%, and you dump and you wait for the next setup. And that's what swing traders do, right? We basically take advantage of mismatched pricing based on fear or greed, and we go inverse to that. Basically, counter trend is what I like to do, because ultimately, you get a quality name like Apple to dump into this level, you'll get a bounce at some point, right? Apple's not going to, in theory, it's not going to come all the way on a straight line down here without a bounce, right? So you have opportunities in the midst. All right, mix. Okay, next up, Decker. Decker getting hammered pre-market. Take a look at Decker here, guys. What a drop on DECK. This company reported earnings yesterday after the bell. It is trading at 100 or just below 100. What a drop. There is major support that I'll be watching at 94 for a day trade. 94 for a day trade. So again, 94 is your first key technical level, basically $5 away. Very doable. If I'm looking to swing trade this, I would be patiently waiting for 81. Gap fill. Look at that huge gap on Decker here. Huge gap, which started this bull run. Now, where we fell, we had a big bounce. And if we fall here, that would be a full retrace of the entire bull move. There should be, and I say should because there's no guarantees, there should be technical support on deck at that 81 level. Ross Stores getting crushed as well. Look at these retailers falling, guys. Ross Stores and Deckers, both retailers. Ross Stores is down significantly, went as low pre-market as 130. It's bounced back to 134 here. But if we look at this, you notice where it's coming into support. See these little pivots in here and this low here? Now, again, it's already hit that, so I'm not a buyer there. I'll show you where I'm going to look for. I am going to be watching, taking this pivot right through here. Boom. My support level will be at 127 and change for a day trade. All right, not a swing trade, though. This stock is still, look at how vertical this is. I mean, this is still relatively high. So for me, it's just going to be a day trade right here. Workday having a big gap down as well. Workday trading sharply lower on earnings from yesterday after the bell at 248. If we flip over here, my first day trade level on Workday, look at this little pivot from this low here, right through this high, right through there, and right across at 235 and change. So if we dump out here, this would be a good day tradable level on Workday. Intuit, one of the few stocks to be rallying on earnings today. And this stock, again, surging to the upside at 715 or so here. If we go to the daily chart, let me just get rid of my old lines there. Interesting. It's right at its pivot high here, but it's already kind of hammered on that, so I'm not going to look to short it. If we go to the weekly chart, that's basically your all-time highs. So honestly, I don't really have anything. If it breaks above 715, it's somewhat in uncharted territory. The only thing I could do is potentially take a pivot here. This might give me a day tradable level, high pivot to the highest pivot here, and that would be right around, let's see here. Today, that would be right around 745. So maybe 745. Again, I'm not sure if I love that as a trading opportunity. All right, on to Bitcoin we go. Bitcoin here, daily chart is pulling back today. Based on this, again, stock market dumps out. Fear is coming into Bitcoin. We know generally, not always, but about 80% of the time, Bitcoin moves on greed and fear, meaning it's a risk asset, and it is pulling back today. It has not achieved my key target of around 113 and change, though. So again, maybe it's not over. And remember, if we start seeing the U.S. kind of bullying with tariffs and threats, there was a period in early April where Bitcoin actually went up on that while the market went down. And so there is a chance that if this escalates, that Bitcoin could be viewed by the global investor public as a safe haven. So let's watch and see, but maybe that's what pushes it up to the 113 and change level. Gold today. Let's see what gold is doing. Gold, of course, is up, guys. Remember the level I gave you guys? I said, guys, this is going to be resistance on gold. It's there. Now, is this a shortable level? My answer is no, only because I still think this is a bullish pattern as long as it holds above this support. So again, the longer term trend is up, right? Long-term trend is up. Yes, it's had some good pullbacks, and I did capture some good shorts on this. There's no doubt about it. But I still think that as long as we hold above here, this is a lower high and lower low shorter term pattern, which is net bullish, right? This is bullish consolidation. And so while it doesn't mean that gold won't pull back off of this level, it's just too high risk. I don't want to short into a bull flag breakout if it were to happen. Now, silver, I have been bullish on. It did break out a couple days ago. It had a check back to this level. Today, it's basically flat to slightly positive. As long as it holds above this line, it's actually fairly bullish for a move higher. Oil today, let's take a look at oil. And oil continues to grind lower. A lot of sideways chop for the last month and a half on oil. Net, this is a flag pull down with a lot of inside bar. It's a bearish pattern developing. But again, no trade for me yet on this chart. Lastly, natural gas here, folks. Nat gas up just ever so slightly today, really in no man's land, still stuck between resistance and technical support, not into support where I'd buy it, not into resistance where I'd short it. So I'm leaving it be for now. But wow, folks, there's a lot of stocks moving. The stock market is moving. Kind of crazy, right? So the market had been lulled into this kind of quiet period. The VIX had gotten down to 17. VIX is the fear index. Now the VIX is spiking. I did pick up the VXX with Smart Money Stocks members. We have a lot of shorts out there. So we're going to be in very good shape today. If you're in my options service as well, Smart Money Options, Awesome stuff there. We should be in the money on a majority of the trades there, as a lot of them were puts that we bought in the last week as well. So I will keep you guys posted, but let's get to trading this market. This is a great volatile day to make some great money going into the key holiday 3-day weekend here in the US. You guys have a great one. Thanks so much for all your support. Thank you for appreciating technical analysis like I do. It really has changed my life, and I'm a true believer that if you guys learn it like I have, you literally have your financial destiny in your hand. It's very, very powerful. Have a great one. Happy Friday, folks. Take care.